dependence on China, strengthening a multi-channel go-to-market, and reducing dependency on large format stores. That's at least in the near term. Close monitoring of channel inventories and timely supply to trade to help them manage their capital employed optimally. And finally, promoting Lara opalware as daily usage products and reduce the brand's dependence on gifting. For the scientific division, we will focus on our laboratory glassware business with pharma manufacturing companies, which are less impacted owing to COVID. Developing new customers in food and environment segment to mitigate the business loss from research and educational institutes. Of course, tapping new opportunities with potential vaccine manufacturers. Thrust on import substitution with new products developed in the LabQuest instrumentation range, and focus on expanding export sales across our already existing customers in various markets by appointment of new distributors. While we are cognizant of the several near-term challenges in the business, the company will also focus on the opportunity beyond. Our straddling the consumer and scientific division is a strength and makes us resilient. Borosil's strategic direction to build multiple pillars of growth for both the divisions has definitely helped us in the last quarter and is playing out well. We envisage a multi-year growth opportunity in both our businesses. Finally, I would also like to add that even in spite of the quarter being challenging from a sales and profitability perspective, our cash flows have been remarkably good. We have been able to reduce our working capital loans substantially over the past quarter, and in general, the cash position of the company remains very strong, both from a treasury as well as from an operations perspective. I think the team has done a good job in managing these cash flows and cutting costs as required, and I'm pretty optimistic that from Q2 onwards, we should return back to some semblance of normalcy, even though coming back to pre-COVID levels may take a little bit longer than that. So with that, I now conclude my remarks, and I'm happy to take questions that you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashwini Agarwal from Ashmore. Please go ahead.
Morning, Shivir. 2 quick questions. What is the 3.5 crore one-off that you outlined in your opening remarks?
Yeah, so we had announced an ESOP policy for our senior employees about 2.5 years ago. And as per the ESOP policy, you have to take a, let's call it, provision in the books every quarter for ESOP related expenses. Now, because of the merger and demerger, this provision, and Borosil Ltd, just getting approval for this in the last quarter of 2020, this is basically 9 quarters of expenses that have been all related to the same ESOP scheme, which has been debited in this quarter itself. So that's really.
So this is an accumulated spend.
Yes.
This will not recur in the coming quarter.
No.
And it's a non-cash expense.
It's non-cash. Exactly, it's a non-cash.
And I missed the first couple of lines of your opening comments. Did you provide an update on the furnace as well? Have you restarted the furnace?
No, I was expecting that question. So we are looking to start the furnace probably sometime in the next month. That's the anticipation, because we do see demand coming back now, and with Diwali, not that far away. That's our expectation, but obviously we'll be announcing it when we take the call, and when we actually start the furnace, we'll be announcing it to the public at large. But our expectation is to start it sooner rather than later.
And so my third question is exactly that with your online trade partners or large format stores now starting to open up, your corporate accounts, etc., whoever were buying for Diwali related gifting purposes, I mean, are you getting any early signs of how festive season sales may turn out to be? It's not that far away now.
That's right. So I think I'm pretty optimistic, frankly, because especially in the last few days, there has been two things which have changed. Number one is that there's a lot more buzz in markets. I'm talking about general trade, okay? And I think that's a very positive thing. It's very early. I mean, it's even before green shoots, I guess. It's very, very early days. But we're getting inquiries, which are, decent, I would say. Also, even B2B inquiries have started coming in, and in fact, one or two of them would have also, been at the last stage of conversion. So I think we're getting those. We're getting a positive sense of Diwali. I think in general, what we're seeing with COVID, and I'm sure that most people are perceiving this, is that while the infection rates are going up, people have, with the amount of testing happening, I think we're catching it earlier. I mean, meaning we're catching the healthcare system is able to catch the disease earlier and treat it more effectively. So death rates are coming down, and in general, I think hospital beds are also opening up across the country. So there's a little bit less fear than there was even 2-3 weeks ago. That's my perception. And with less fear means a better outcome for any consumer company like ours, which is discretionary. So in general, I'm quite hopeful that this, even the August, September, and the Diwali, October, November are likely to be pretty good compared to what we've seen. Whether it will come back to pre-COVID levels, or let's say a target for the year, I think we're still a little bit away from that. But I think it'll be good enough that we need to ramp up our capacity, ramp up our production.
Okay. All right. All the best, Shivir. I'll come back in the queue.
Thank you.
Thank you. The next question is from the line of Rishabh Parekh from Sunidhi Securities. Please go ahead.
Hi, Shiva. Congratulations on a resilient quarter. I had a question regarding the wires in Class Pack. Just wanted to understand the ecosystem in a blue sky scenario. What is the kind of capacity we have to produce wires for vaccines? Also, is this manufactured in-house or is this outsourced? If you could just throw color on the ecosystem around that.
Sure. So as far as wires are concerned, we manufacture everything in-house. We don't outsource anything. That's point number one. Point number two, our capacity for the year is roughly 240 million wires. That's 20 million wires a month. Okay. Mm-hmm. So at the moment, our capacity utilization would be hardly 45% because and the reason for that is that we've added a lot of capacity in the last year or so. It typically takes some time to get registered as vendors to various companies because it's a primary packaging. So our ability to ramp up, we could probably double from here without having any further capex in terms of revenues. But that being said, there's a lot of hype in the market about wires. While I would definitely say that it's going to convert into actual sales, I think it's still a little bit away because right now companies are still testing their vaccines, various companies, and we also talk with various companies. I obviously can't name who because we have NDAs in place, but we talk with various companies to supply our wires, and many of them are existing customers of ours. So the hurdle to get through to them is not that high because we're already there. But that being said, I think the question is which company is actually able to launch the vaccine first, and that company is going to probably take the largest share of the pie for the vaccine. So if that company is not our customer, then obviously we will not get that sale bump up. If the company is our customer, then obviously we will get it. But even if that company is not our customer, I think one thing is clear that this vial or this vaccine will consume a large quantum of demand, even if a competitor supplies it. In which case, the competitor may not be able to supply other companies, which will then come to us. So either which way, I do see a good future for this business, and I'm quite positive that whatever investments we made in Class Pack and over the last 2-3 years, including really upgrading the infrastructure, will lead to good results in the future.
Okay, great. And my second question was around the consumer division. So you did mention some optimism coming back Q2 onwards. If you had to hazard a guess for the full year? While I appreciate it's a tough thing to do, would you say what would your best estimate of sales be for the consumer division?
It's a great question. I ask this question every day to my sales guys, literally every day. So it's very, the thing is, the policy of each state government is like, now just yesterday Punjab again said lockdown on the weekend, and for through this end of this month. Now, in the beginning of the month, if I'd asked my Punjab sales team how much you're going to sell, they'll give a number, right? But now, if there's a lockdown and the weekends are shut, no force on earth can predict that, A. And B, with the lockdown, then the sales will automatically drop by 80%, right? So any number I give will have absolutely no veracity, because I don't control any of those policy decisions which have been taken at various government levels. So I think it's a bit too challenging. What I can tell you is that we would love if we could achieve last year's sales number. We would love it. Okay. Do I see that happening as on today? No, I don't see that happening as on today. But is it in the realm of possibility for it to happen? Yes, I think so. We've not given up hope, but that's hope and not a strategy, at the moment. We are trying our level best to try and see whether we can achieve last year's numbers. It's looking, with every month going by, it's looking harder and harder. But I don't think we've given up that fight yet. That's just a desire.
Yeah, great. No, I appreciate that. It's very hard. Thanks for some direction. My last question is around competition. So, pre-COVID, we saw a lot of these consumer brands starting up and heavy discounts and a lot of competition in your product categories. With COVID, do you see the intensity of the competition going down to your regular competition and not, are you seeing some kind of reduction?
It's too serious, frankly. I think it's really too early. We'll know the impact probably maybe in another 3 months. Maybe in the next quarter I can share that with you, or I can share my thoughts with you. But so far everything's been dead, right? So when everything is dead, it's hard to judge. It's hard to judge how others are responding, what they're going to do. But look, the organized players are still around and they have strong balance sheets and they're not going anywhere. But if it's the smaller and unorganized players that you're talking about, that I think we will know more by Diwali time. So if we having the same discussion for Q2, which will be just about around Diwali, in my opinion, I'll be able to answer this question probably a bit better.
Right. Just because there's a lot of unorganized presence in your spaces and you play in such a spot that it might be leading to some consolidation opportunities.
One thing I can tell you is there's a lot of anti-China sentiment in customers. We get mails a lot from various customers asking which of our products are made in China. So that's something new. We've not seen that before. It's pretty interesting.
Thanks.
We are looking. As I already mentioned, we're looking to move that to India, and a lot of the unorganized guys are buying from China. So I think so that will help us for sure.
Thank you.
Thanks.
Thank you. The next question is from the line of Manav Vijay from One Up Financial. Please go ahead.
Yes, thank you very much, sir. Am I audible, first of all?
Yes.
Okay, perfect. So, sir, I actually have two sets of questions. One is for Lara and second is for the class pack division. First of all, on the class pack, so in FY20, we did a sales of around 45 crores, and you had mentioned in Q4 call that you were at around 50% utilization. So for a 25 crore capacity, and so you made around 12.5 crores. So that converts into roughly 3.6 rupees per realization, per bottle per realization. Now, if I do some basic Google and if I see the costing of, let's say, basically a vial and an ampule, a basic ampule costs roughly 2 to 3 rupees, whereas a vial costing is anywhere from 8 rupees to 20 rupees as well. So I just want to understand, first of all, why our realization was so low in that division when you are saying that you were making both vials and ampules.
No, I think firstly, your estimation of pricing is from Google is probably not correct.
Okay.
An ampule would not cost anywhere close to 2 rupees. Typically, an ampule costs few paisa, 40 paisa, 50 paisa, 70 paisa, like that. Okay, that's the first point.
Okay.
because we sell it to a pharma company, and the pharma company then packages it. What you get in the end market is completely different because it's got the drug filled in it. So, but a glass ampule which is sold in quantities depending on size would be not sold in rupees. It'd be sold in paisas. Okay, that's point number one.
Okay.
To your again estimation on vial per piece vial cost is very high. Obviously now vials depend on the size because ampules typically are only 1 or 2 ml most of the sizes, but most of the demand. But vials can be anywhere from 1 ml to 50 ml, and there's a big price variance between the vials. So it's hard to say to compare our pricing with whatever you are seeing on Google because I'm not sure what the veracity of that information is. But I can definitely tell you that we strive to get the best price for our products, and we sell to very well organized pharma players who are doing who have access to global sourcing. So we have to compete in the global market, and we within that we try and get the best price possible.
Sure. My second question is, sir, so now let's say whatever capacity that you have under your class pack, all that capacity is fungible between ampule and vials, or is it specific capacity?
No, it's specific capacity. So the product is totally different and made on 2 totally different machines. One machine cannot make the other.
Okay, so is it possible for you to break that down into how much is for you have for vials and for how much you have for ampule?
So I think we've already done that, but I think we have a capacity of about 500 million ampules per year and about 240 million vials per year. That's roughly the capacity.
Okay. Now my third question is, sir, so in Q4 call, you had mentioned that you can basically double your your capacity in vials with in class pack with, I would say, a very little investment. Now around same time you had given one, I would say, in one media article where you had mentioned that you actually triple your capacity again without much of a capex. So now the plant that you have in Nashik, so what kind of a space that you have, so let's say in case as and when the drug comes and with that the demand for the vial and the ampule comes, how much can you expand first of all, and let's say what could be the timelines and capex if you can share?
So as far as what I mentioned, I don't know which article you're referring to, but I can certainly say that I already mentioned in this call that we are about 50% capacity utilization today. So I can double our vial sales with 0 rupees investment because I already have capacity. Now beyond that, I can further double in the same location without any infrastructure required because the building is there, everything, workers are there, everything is in place. Only question is machineries that would be required. Those machineries, the cost of those machineries can vary substantially depending on what you're trying to produce and where we decide to buy the machines from. It's improper for me to just give a number at the call because it will depend on what size. For example, if the COVID vaccine is released in a 30 ml vial, we'll buy a different machine which will come from a different manufacturer. If it's bought in a 3 ml vial or a 5 ml vial or a 10 ml vial, it may be a different machine from a different manufacturer and the capex may be totally different. So I would not like to give a number today because I don't have any clarity on how that capacity will double, in what form it will take. So it's a bit challenging for me to give that number. But I can say from here I can double without any capex. Beyond that, it will totally depend on the on what machines we buy, and what machines we buy will be dependent on what product the pharma companies want.
Sure. My next question is, so if you look at worldwide, all the large vial manufacturers, let's say whether it's Scotch, Corning, SGD, Nipro, so nobody is actually willing to commit capacity to anybody because, like you mentioned, that nobody knows who will come out with the medicine first. Now, are you also getting, let's say, such kind of commitment requests from your customers? I mean, some of the companies must be your customers already, some of the potential customers. Are you also getting such, let's say, such requests to pre-book the capacity?
I mean, frankly, people talk about it, but no one's going to pre-book capacity, right? Unless someone gives you an advance, you're not going to pre-book capacity. So it's good to say, but I don't think anyone can do it or will do it.
Okay. Now, my last question for this division is that, sir, now in your, I would say, in your FY19 annual report, and I believe also in quarter four con call, you have mentioned that you're actually number 2 in India in terms of your capacity. Whereas, I mean, Scotch Cassia, which I believe they have a 3 billion unit capacity, and I think Piramal Glass has some 1 billion capacity, whereas you have roughly 25 crore capacity. So can you elaborate whether you are number 2 or number 3, or what is the scene? I'm sorry, I mean, I'm a bit confused over there.
Firstly, Piramal Glass does not do our product category, meaning does not do tubular glass wires at all. They are molded. It's a totally different segment. Okay.
Okay.
So they would not even fall in our competitor set. But yes, I think Scotch Cassia is by far the number 1 player in India. And I don't have exact capacity details of other players, but I would say we are definitely in the number 2, number 3 range if I take all of the other players that I know of. But that's not a formalized statement which is based on any research. This is based on our own internal estimates of the other players' capacity. But Piramal may have, I don't know what their capacity is, but they make molded vials, which are totally different than tubular vials. And in terms of vaccine, most likely, and again, this is an assumption, the demand will be mostly for tubular vials and not molded vials. This is again an assumption, and that's our internal estimate again.
Sure. So now my last couple of questions are actually on Lara. Now, in quarter four call, you had mentioned that, so let's say when you will run at the full capacity, you can do sales of around 200 crores. And at that sales capacity, you will do a margin of around 26 to 28% EBITDA margins. Now, your biggest competitor, La Opala, which in FY20 did a sales of 270 crore, 45% EBITDA margin and 30% PAT margin. So I just want to understand, so the margin that you are talking and what that company is doing, what is the basic difference? I mean, the construct, is that guy is getting so much of margins because they have a larger sales base or maybe some kind of operating leverage, or they command better pricing in the market, or they have lower working capital days? If you can elaborate, that would be really helpful, sir.
Yeah, I've said this a few times in the past already, and I'll repeat it.
Sure.
The main difference is that we spend more money on advertising and sales promotion, and our advertising sales promotion expense is almost 10% of our sales, maybe anywhere between 8 and 10% of revenues for last year, whereas our competitors will virtually spend zero. Okay, so there's a 8 to 10% gap which comes directly from that. Which is almost a chunk of that gap. The second is our electricity prices are higher in Jaipur compared to what our competitors pay, and that may account for 2 to 3% if I'm not mistaken. Then we had a slightly higher cost on supply chain, which we have since rectified because we've got our warehousing now consolidated. Unfortunately, that happened right during COVID, and we've not had a chance to benefit from it yet. But whenever this thing start up, it will benefit. I think these would make up the majority of the difference of say 15% odd, maybe 12-13%, and yeah, 2-3% may be attributable to larger size that they would have and operating leverage.
And Shiva, also the 5% on account of this other income they are getting from their treasury divisions.
Right. There you go. Yeah, so their treasury division generates, they have cash reserves. So that's a good point. Thank you.
Okay, sir. My last question to you, and then just last, and then I'm done.
I'm so sorry, sir, but we have other participants waiting.
Can I make a small request to the management? Small request.
Yeah, sure.
Sir, my request is that so the information memorandum that you guys had filed in the month of July. Over there, the balance sheet that you have prepared, that you have given the console balance sheet, that print is actually completely not readable at all. So if it is possible for you, just I would say on the exchange, send the console balance sheet for quarter one or for FY20, which is readable. That's all. Thank you very much, sir.
Rajesh, please look at that and do it.
Yeah, we can do that. Okay.
Thank you. The next question is from the line of Anmol Grover from Albatross Capital. Please go ahead.
Hi, good morning, everyone. I hope everyone's healthy on your side. My question is, I just wanted to know if that this year we can't predict anything, but if you take a longer-term view, a long-term vision of 3 to 5 years, so how do you see the growth and the margins going forward, and what would be the drivers of that?
So I don't think anything has changed. In fact, I would think that eventually would get benefit even our consumer division, because people will take time to go back out, and people will entertain more at home and cook more at home. So I think that augurs well, because all our products are home use in the consumer division. And on the scientific division, we have research has not been on focus much in India as far as pharma research is concerned. And I do believe that with COVID, it has taught the world that we should not be lax in research spending. So I think COVID in the medium to long term will be a fantastic driver of growth for both our divisions. That's my expectation. Obviously, it's a very funny statement to make given that we've had a terrible quarter. But I do believe that we are in both the divisions well placed to capture the changes in consumer habits, as well as the changes in R&D spending, which will likely result, let's say, out of COVID. So I'm pretty happy about the future prospects of the organization. The second thing is in terms of drivers. So obviously, behavioral change from end customers has to be the first point. Second point is, I think from a channel point of view, I would say the driver e-commerce will be a large driver. Because COVID has again changed consumer habits, where people are very comfortable buying online. And I think somewhere I read in a research report that COVID has done in one quarter what has taken last 10 years in terms of customer adoption to e-com. So in one quarter, more customers have adopted and gone online than in the last 10 years combined. So that's, and I don't know whether that's fake news or not, but it seemed pretty genuine, that article. So either way, we are seeing the e-commerce becoming a larger and larger contributor. And I think e-commerce. I think Rishabh had asked a question on what is the future for the rest of the year. I think one thing I'm sure of, which I can bet on, is that e-commerce division will have a substantial growth over last year, even as other divisions may reduce. Other channels may reduce, but e-commerce will definitely grow. So I think these are the two main drivers. I don't change my medium term, what I'd always mentioned, 15 to 20%, CAGRs on consumer, and somewhere between 8 and 10% or 6 and 8% in scientific. I'm not changing that anytime soon. This year being an aberration. So I hope that answers the question.
Okay. Just wanted to know more on the margin side. How do you see margins going forward? Is there any change in the cost structure, or will you see operating leverage kicking in? So is there a margin expansion possibility going forward as well?
Yeah, I think that's a good question. I do believe that there is a scope for margin expansion, because one thing that COVID has shown us is that that some expenses we had were not good expenses, and they've all come off. Wherever we could cut, we've cut, and I do expect that those expenses will not come back on, even when demand returns. So I think the good companies should learn from this crisis, and I hope we are one of them. And in that learning, we should be able to only onboard back again expenses which are let's say good expenses, and we should be able to eliminate expenses which were truly not helping us at all. So I can't give you a number, but anecdotally I can tell you there are a few areas where I feel that that cost will not go back up, and when sales return to normal. So anecdotally, I do believe that margin expansion can be expected as a result of this in the medium term. Obviously, short term, when sales are very badly impacted, even if you reduce costs as a percentage, you can't ever reduce costs by the dramatic reduction in sales. So in the short term, that may not be true, but I would say, if assuming COVID is more or less, either we learn to live with it or it's over by this financial year end. So next year, I think we should see some benefits of that.
Okay. So just to clarify on this CAGR bit, you said 20%. You said over medium term, so that's basically 3 to 4 years. That would be a right assumption.
Yes.
Okay. That's all from my side. I'll get back in the future. Thank you.
Thank you. The next question is from the line of Krish Kotari from Shinobi Capital. Please go ahead.
Hi. Does a reduction in reliance on China imply that you are considering significantly building manufacturing capacity in any division, especially your appliances business? And has the pandemic led to any opportunities for distressed acquisitions of either brands or manufacturing facilities?
So I'm sorry, I didn't get the full first question about China. Could you just repeat that, please?
No, so I was just wondering that if you are looking at reducing your reliance on China or basically any imports for any of the products that you sell, then in order to do that, will you have to significantly enhance your own manufacturing capacities?
Yeah, well, I think this would yes, that we will definitely we already started reducing our reliance on China, and the next answer to that question is on that if it's glass, then we would be expanding our downstream capacities where required. That I don't think would require too much capex at the moment. Where it's stuff like appliances or steel, I think there are players in India who are already manufacturing these products, and we would approach them because they have decent setups, and we've already started approaching them. So we would be able to, without spending capex of our own, be able to move it from China to India. That's obviously it's not going to be 100%, and it's not going to happen overnight, but it's a process, and we've already started that process. So that I think is really the thrust over here. And definitely we want to make, after whatever's been happening at the border, I think our own team also feels very strongly that, we don't really want to be dependent on China for our products. And there's nothing in there which we can't manufacture either internally or through third parties in India. So everybody feels quite strongly about it. And I hope that we can implement this change, maybe over the next 12 to 18 months to a large extent.
Okay. And so my next question relates to Lara. Does the nature of the product as well as the challenges in shipping and handling of that product, does it significantly does it necessitate that there needs to be a massive revival in physical brick and mortar shopping for that product to sort of start selling through well again, or is e-commerce a viable option for that brand?
Look, e-commerce is absolutely a viable option, in my opinion, for that brand. And we've started also getting good traction online. And I don't think, obviously 100% of the sales can't be on e-commerce, but for sure there could be a much larger percentage than is the current on e-commerce. And I'm betting on that, in fact. And as a team, we are betting on it. And we are setting up our packaging in a way which can withstand the kind of handling that happens in e-commerce. So look, there is not much difference between the Lara glass and Borosil Ltd glass. And Borosil Ltd glass we're shipping out to all corners of the country without any problem, with less than 1% breakage on e-com. So I don't see why we can't do that for Lara. So we think e-com will drive also Lara's business in addition to Borosil.
Got it. Okay. And I have one more question relating to Lara and I suppose the consumer division more broadly. In the process of constantly updating your SKU range, including both additions and deletions, what are some of the major insights you've gained with respect to consumer preferences, pricing, and if eventually you could operate with a materially smaller SKU range?
Well, it's hard to, of the insights we've gained, I'd rather not share because that's really competitive information. But in general, I would say that choice is a requirement for customers. Okay. And while obviously from a production point of view, you want to have the smallest range possible, customers like to have choice. And in some sense, having choice expands the market. Because when you go and you see 10 products, say 10 dinner sets with 10 different designs, you may buy one of them. If you had only seen one with a design you didn't particularly care about, I don't think you'd buy. So by having 10 sets, you sell one. On the other side, if you have one set, you may sell 0, right? So choice matters. That's, I think, one of the key insights. And how do we, given that constraint, how do we set up our back end to be able to deliver that choice with least possible, let's say, inventory addition? I think that's a question which our supply chain can deal with, both from a production as well as from a analytics point of view. If we are able to predict sales preferences, if you're able to talk directly to customers through e-commerce again, I think we get a much better idea of what they like and what they don't like. So there also, I think e-commerce will help us, deliver the choice without necessarily increasing the inventory that goes with delivering that choice. So that's really, the where we're trying to go towards. I don't think we're there yet by any yardstick. We're far from it, but I don't think we can reduce the number of SKUs to answer that last part of the question.
Got it. Okay. And so my last question is the SIP division. Do you have any major presence catering to chemical and diagnostics companies, or are you only focusing primarily on pharma companies?
No, we sell to both chemical and diagnostics, but not not like that. We don't have. We sell in the lab, not in the process. Okay. So for chemical companies, so those big lab reactors and all, which or the chemical process systems we don't sell, which other companies do. So we don't really focus there. And as far as diagnostics is concerned, diagnostics is a very, very price conscious market, and the product range is slightly different, more plastic oriented than ours. Although with our LabQuest range of instrumentation, there will be some more sales in diagnostics going down the road. But specifically, glassware is not much used in diagnostics anymore, and it's been like that for the last maybe 20 years. It's mostly plastics. So diagnostics is not a big, end use for a customer for us.
Okay, got it. Thank you.
Thanks.
Thank you. Next question is from the line of Ashwini Agarwal from Ashmore. Please go ahead.
Hi, Shivir. Referring to take on two of your comments. One is you're saying that e-commerce is going to remain a very, very important channel and increase in its scope of importance. So how do you see the brand salience in light of the fact that discovery of alternate products or discovery of less known brands over the internet is much easier? So, do you fear that this could turn out to be, again, one of those consumer products where there are a lot of lookalikes and knockoffs that erode the brand promise of either Borosil or Lara?
Yeah, I think that's definitely a risk. There's no doubt about it in e-commerce, because you can see 10 different products which look exactly the same. You don't touch or feel them, and you get one at a cheaper price. So in some sense, it's a race to the bottom. That being said, that's on the, I would say, risk side of the equation. But where are the benefits of e-commerce? I think the e-commerce it's not simply just putting a product at a price, right? It's a whole system of working, which includes reviews, which includes product development, which includes advertising online and giving a brand story online. And if we do all those things, which I think we have been doing very well, I think the chance of you buying a product even at 20% higher or 15% higher, because it has a better rating next to a product which is exactly similar looking, at least with a no-name brand, I think is quite high, especially for a category where the absolute value is not that much. It's like $300 versus $350. So you say I spent $50 extra and buy a Borosil container. So if we can't do that, then yes, we lost our brand value. But I think if we can drive the ecosystem in a way that we are able to have the best ratings in the category, if we are able to advertise so that whenever customers are searching for products, we come up there, and if we are able to make sure that we keep understanding what customers are commenting and launching new products faster than our competitors, then I think e-commerce could drive substantial value, and it already has. And whatever I'm saying is things we're doing already. So I think that just like any channel, it has advantages and some disadvantages. But I think by far the advantages outweigh the disadvantages, by far. I mean, the kind of reach that e-commerce has is beyond what I think we could have imagined 5 years ago, in terms of where all our products are going and the zip codes that we see today. I don't think Borosil products would have entered there even 15 years later, left to the routine scheme of things. The other thing I'd like to add over here is glass is as it is underpenetrated as a category. So with e-commerce, I think another thing is because when you ask a question, I think you're talking about glass. Okay, somebody's searching for a storage container, let's say Borosil glass, and then they show some other XYZ brand. But think about the people who are searching for just containers and who would have originally only thought of buying a plastic container, right, or a steel container. And if I can switch them to a glass container, at least having glass in the consideration set, which is very easy to do online, then that opens up, if glass has 5% share, and I can, increase that share to 10%, from a customer's wallet point of view for, say, a category like storage, then I'm doubling my business without without too much pain, versus trying to do the same thing in trade is virtually impossible. So I think on the balance, e-commerce is very, very strong channel, especially for us, and I think that our brand value will grow, not reduce, with the channel.
No, thanks so much for that insight. The other one is that are you facing any restrictions on importing non-glass products that you currently sell from China? Because you mentioned that switching over to domestic supplies will not happen in full and will take time. So in the interim, is there a risk?
Look, at the moment there's nothing. Tomorrow there's a war with China, then things may change, of course, but that risk remains for sure. But at the moment, there is no restriction on imports for us for any part of our range.
Okay, thank you so much.
Thank you. The next question is from the line of Dhruv Bhatia from BOI Exa Mutual Fund. Please go ahead.
Hi, Shiva. A couple of questions. Firstly, can you just talk about the fixed costs, for your business? What is the annual fixed cost that is incurred the entire for Borosil?
Yeah, I don't have an answer to that question off the top of my mind. Rajesh, would you have this immediately available?
It will be. We'll come back to on this.
Yeah, let them work on this.
Yeah.
Okay. The second thing is, I see that you've started, in the appliances category, you've also, I think, entered recently into the cookers segment. Can you just talk about the strategy that you intend to, lay out for the appliances business?
See, this has been an overarching kind of theme for us, that we want to be an everyday use brand. And if we want to be really a kitchen and tableware brand, everyday usage, then the category is like a pressure cooker, for example, is something that all Indian households use. I guess you're referring to pressure cookers, right? Is that what you're referring to? Yeah. So everyday use brand is something that if we want to be, then we need to have products which are actually used every day. And the pressure cooker is one of them. Now, what we've introduced is a stainless steel pressure cooker and not an aluminum pressure cooker. And here the thing is that it's the healthiest, the safest to use for everybody, and it's a very high quality product, right? So the brand promise is that it performs beautifully. So our performance of our product has to be the best, and we have to look good, and which is what we fulfill even with special cookers. And we want to be an everyday usage player, not restricted to any particular, let's say, medium. So it's not just glass. We won't do plastic, but we can do anything other than plastic, as long as it's safe and healthy to use for individuals and good for the environment also. So that's really the strategy here. And we found that there's a gap in pressure cookers in a particular category. Let's call it stainless steel, the 3 and 5 liter pressure cookers, and we've decided to try and experiment with it. And I think based on initial feedback, it's quite positive. So we'll see how it goes. I'm not saying all our product launches will succeed, but certainly many of them will succeed. And we like trying new things and doing things, and so this is a part of that whole initiative.
And because the distribution would be similar to your other consumer businesses, the same dealers network, and it doesn't seem like that there is too much branding spend that has been done on the appliances. Would it be fair to say that on a very small base of revenue, you can break even in this business?
Yes, absolutely. I think we will already be, I'm saying all of this is pre-COVID, obviously, but pre-COVID, say last year, I think our appliances business would have broken even, more or less.
Okay. And what would be the appliances revenue that you did last year?
So, we don't share that data yet, but we are reworking on our investor presentation, and in the next quarter, I may be able to share more data than I do currently. But I'll hold that in suspense for a little bit longer. But I do, I can say that I think I'd mentioned last time that non-glassware is more than 100 crores for last year.
Okay. Sure. And just lastly, if because you said that you're going to probably start the furnace maybe next month, what is currently the inventory maybe sitting at the dealers or distributor level? Any sense of the dealer, distributor, retailer level?
We don't have that data. We had been working on a pilot pre-COVID. In fact, we had launched it's gone beyond pilot stage to actually get that information. So right now, whatever I give you is anecdotal. It's not hard data. But I think the inventories have reduced fairly substantially, and that's why I'm saying that from last couple of weeks we are seeing an increase in demand across the board. The only challenge is the outlets themselves need to be open. If they're allowed to open, then I think we're okay. If the outlets are closed because of enforced lockdowns, then we have trouble. That's on the trade side. On the large format stores, we have a deeper challenge because of the recent issue with Big Bazaar, which was obviously one of the largest in the country, and them having gone, that's a big customer just disappearing overnight. Which is obviously others will come and fill that gap, but in fact, large format stores had mostly been in malls, and malls had been closed till very recently. So large format stores have been really badly impacted in this whole crisis. So what we need is that the retail stores should remain open, and somehow there should be a resolution to the problems that large format stores have been having, which I think has already started, but that needs to happen faster. And then I'm not so stressed about demand.
Sure. Thanks a lot. Good luck.
Thanks.
Thank you. Next question is from the line of Vaibhav Barjatia from HNI Investment. Please go ahead.
Thank you for the opportunity. So, because we've gone through a lot of restructuring in last few months, just wanted to understand for this new Borosil business, which is just a consumer wear and labware business. So what for FY20, what would be our ROC, return on capital, excluding the treasury part of it? The core business ROC, what would be this number for FY20?
I think it was in the low double digits, but Anand, can you just confirm this, or Rajesh? For last year, you're asking me?
Yeah, for FY20.
If I'm not mistaken, it was 10 or 11%.
Okay. And lastly, for the appliances division, which is non-glass appliances division, what would be our value propositions, or what kind of positioning we are looking for? Because we are slowly developing this product, and this is a big market and really crowded market. So what would be our positioning? What kind of whether we will be on the top end of the market, or we will be value for money kind of players? What are you thinking about that?
Yeah, I would say that we are definitely towards the top end of the market. We are not looking at the very low value for money segment. We have our desire is to compete with a Morphy Richards or a Philips, that's really the price point and the area we'll be competing, and that's what we have set up our appliances to deliver. So that's where we have. I mean, we've been there for so it's not brand new. We have been there for 3-4 years. And I think we have done a pretty decent job of it. And many of our appliances, whether it's sandwich makers or OTGs or toasters, kettles, we're doing very well in the market.
Got it. And just a clarification, in my earlier answer, you said that it is somewhere around 10-11% return on capital employed for the consumer and the labware business put together.
This is taking there was some one-time expenses related to a merger. I think removing those, giving answer. Yeah.
Yeah. So but for sure, our lab business would be a very high ROC. Excluding that, it would be single-digit ROC for the consumer wear business.
So consumer business also, Lara is different and this is different. Again, rather than give a number straightforward to you, I can work on this and come back to you. But I think we had disclosed it last time, if I'm not mistaken, but I'll have to double check it. I don't have that presentation in front of me at the moment. But yes, Lara was the more, because Lara has a high quantum of capital employed. Given that we had acquired and then we upgraded the facility. So the return in Lara has been low so far. And we need to sell the whole furnace, sell the full capacity of the furnace to improve the return on capital. And that's really the focus as soon as we start the furnace again in Lara.
Got it. Okay, that's it from my side.
Thank you. The next question is from the line of Vaibhav Gogate from Ashmore. Please go ahead.
Oh, yeah. So how should we look at the gross margin profile going ahead for the company?
Hard to say at the moment. I mean, again, you're talking about post-COVID. Is that a specific question relating to COVID or in general?
Let's say as the consumer wear normalizes.
I frankly think gross margins will improve because I think as we go forward, we would be able to drive lower costs, whether it's in terms of purchase of products or raw materials or what have you. So I don't think selling prices will reduce. So I think gross margins should improve at the margin. It may not be a substantial improvement, but maybe a 1 or 2% improvement I foresee in gross margins. But this is subject to many factors and subject to competition. As I mentioned before, right now everything's been kind of quiet because there's hardly much sales happening. So how competition is going to move, we'll only know in the next month or two. So if competitive intensity increases, then maybe what I'm saying will not happen. But at the moment, I do expect a small improvement in gross margins.
Got it. And how has the ad expense moved on a YOY basis compared to last quarter?
So I had mentioned this in the opening remarks. We're down, I think, from 8.5% to 5%.
And what would be the contribution of e-commerce to overall revenues in the current quarter?
Last year was 10%. This quarter doesn't have any meaning because the sales itself are down 75% for consumer. So I think this, obviously it's gone up beyond 10%, but I think it would be too early to see, what is the full, what's it going to be on a normalized quarter, which may happen in Q3. Even Q2, I would say, it's not normalized quarter. Large format stores only started from August 5th or thereabouts in many cities. So, but e-commerce, I think from 10% will definitely go up, maybe 15 to 20% for the year, somewhere in that range.
And what is the typical contribution of modern trade to overall consumer revenues?
It's about 15 to 20%. So it's a substantial chunk.
Got it. Thank you.
Thank you.
Should we take one more question and then close it?
Yeah, sure, sir. We take the last question from the line of Dhruv Kashyap, an individual investor. Please go ahead.
Yeah, morning, Shrivar, and firstly, a big thank you and congratulations to you and your team, the way you've been running the company over the last few years.
Thanks.
Yeah, it's been quite an honor and a privilege to be an investor in this company. I had a few questions, and since I'm the last one, I hope you'll humor me with about 2-3 minutes. I think the first question was that, these pandemics like COVID, Shiva, time and time again teach humanity that, ecological and environmental balances are not to be sort of tampered with. Now, Borosil is beautifully poised in terms of moving people from melamine to opalware or plastic to glass. Would this not be the sort of Armageddon or moment of reckoning where we should go to every household in India to tell them to move from plastic to glass? So shouldn't this be the time we should double, triple advertising and not cut it down or communication or product, but essentially the 6 P's of the marketing mix? I mean, wouldn't this be the time where proverbially sort of, strike while the iron is hot?
Okay, in principle, you're right. I think we are, like I said before, COVID is actually, a long-term benefit in terms of change in lifestyles and what that means for our product range, for our business. But yeah, I mean, in principle, I can't argue with your point. The only issue there is, even if I go and bang on the doors and say that Borosil is the best product for you, the question is how will they buy it? So if I do a TV ad, no one's going to trade, or that large format stores are closed. So access to market, I mean, knowledge is one thing, and then action is the next, right? So that action is only possible today, or in many cases, people are too scared to go out and shop, so they are buying online. So while we have overall reduced advertising spend, our spend online has doubled already. So there we are, we are more or less in line with what you just mentioned. So online we are, driving a lot of our ad spend, and that will continue. When to go offline and increase the ad spends will a little bit depend on, how the markets open. And I think we are still maybe a month or two away from that. Even the monsoon has been in full swing. People anyway, July, August are low months in general for people to go shopping because of, heavy rains across the country. So in general, I buy what you're saying. I think it's a valid point, but we would need to see some visibility of that. Okay, knowledge should be able to be converted to action in terms of buying, and that's when we can, spend more money on advertising.
So what I meant, Shiva, was more as a sort of marketeer that this is the time to keep your sort of product pipeline and communication pipeline ready to deploy it once the market's completely open, because I guess we have to do the back end work in these dry times.
Yeah, that's right.
Okay, my second question, Shiva, is that on this strategy of yours from prepare, cook, serve, and store. I really loved the way you've done this. Being a Unilever guy myself, I really like this slide. My question on this was on the prepare part, which is cut, chop, grind, and mix. We don't seem to have as much of a play here as we have in cook, serve, and store. So is there a pipeline planned higher on this, or or am I missing something?
No, you're right. We have, I would say, in terms of grinding, we have a beautiful, spice grinder. We have obviously a mixer grinder, which is between mixing and grinding. We also have, salad cutters and, choppers. But I would agree, I think there our product portfolio can probably, be strengthened. But people swear by our spice grinders. But we have been focused a lot on the cook, serve, and store. That market definitely is bigger than the preparation market, because many times people even prepare food manually, like, by just cutting on a or chopping on a cutting board. So I take that input from you. If you have a specific product ideas in mind, I'd love to get an email or something from you about anything that you've liked or you've seen, which I can certainly discuss with my product management team. But yeah, so that I don't know if that answers your question, but that's where we are.
Yeah, we'll do. In fact, both sort of me and my wife, we sort of marketers are professional, and we are great fans of the design ethos of Borosil. So I have a lot of ideas. I guess we can discuss that offline. My third question was, sorry, did I interrupt you? Sorry.
My email address is my first name dot last name at borosil.com. So I'd be happy to receive emails from you or anybody on the spot for any ideas.
So the third question, Shiva, on this CP or your consumer product division was that given this China backlash and the fact that you're planning to move everything sort of, or as much as possible to sort of make in India, is there some sort of benchmarking study in terms of the margins in-house versus sort of out-house manufacturing, and are you better off sourcing or are you better off producing all these products yourself?
Yeah, I think as far as our appliances and our steel range is concerned, I don't think we have the scale yet. We had done some kind of study, but that would require a much larger scale, because say, for example, the Chinese guys who manufacture, they do thousands of crores of products, okay? And they supply to every brand. So it could be a Philips, they could supply to Morphe, they could supply to, worldwide brands in the US and in Europe. So they're really, those companies that make these products, you need a golf cart to drive inside the premises, to go from one end to the other. You can walk, that's the side. So I think while the individual costing is really and it's also dependent on an ecosystem. It's a lot like mobile phones. You need to have a electronic supply chain ecosystem, which I think is slowly coming up in India. So you need to have plastic molding, you need to have electronics, you need to have display technologies. There's lots of things that go into it. Otherwise, just having an assembly line and importing the components from Vietnam or Korea or wherever, or China for that matter, is going to be a waste of time. So the whole thing should be manufactured in India, not just the assembly, the last mile. So there's an ecosystem which I would say is going to grow, and we will be a part of it for sure. But it's early days to go and jump on that bandwagon and say let's just invest in the manufacturing setup.
Got it. Shrivar, my last question on the CPD business was that if you talk to the mobile guys or Voltas or Havells, this is the time around the 15th of August where they start building up the inventory for the festive season. How are you seeing your inventory? I mean, are you seeing a good festive season? How's the inventory build-up looking like?
So my guys were pushing for the last few months that we need to build it up, and we took their inputs, and I would say we had lots of back and forth on this. But we've decided to build up inventory as if we're going to have a good festive season. Just hoping that it'll happen. And the last few days, I think whatever we are seeing, our decision hopefully will pan out. But it was a risk, and we've done it, or rather, we have already done the inventory build-up. And like I said, in our own production, we are starting production now, or we will start.
I'm so glad to hear that, because I had one question on the SIP business. One's been hearing a lot about the pushes and pulls on both sides. So one is that pharma, lab, etc. diagnostics is going to go through the roof. But on the other side, one's also hearing a lot about, government enterprises being big buyers of your SIP business products, and they seem to have gone through this budget crunch. So between the pushes and pulls, how do you see the outlook, given that there'll be both leaks and fills in the bucket, given what I just said?
So overall, I think we were down roughly 25% this quarter on our scientific side. And I think that is largely comprised of educational institutes and government fund research institutes who have exactly the problem that you mentioned. I think educational institutes aren't starting anytime soon. That's my perspective. So that sale is not going to rebound much. But I did mention that we are looking at some new markets in food and drug, food production. There are lots of food, testing apparatus which we are trying to develop, whether it be testing of fat estimation, whether it be testing of nitrogen content in soil, so there's some Geldal apparatus. So there's a few instruments we're trying to develop which go into these markets, and whatever loss in sales that we may have in one area, we try and make it up in other areas. So overall,
specifically on the government outlook, I mean, these R&D labs of the government and all that buy a lot of your product, what's that looking like?
That's not looking so great, frankly, to be honest. That we're not seeing much demand there, and there's no funding, frankly, because I think all the funding is gone to other places. So definitely, we all know that there's a big deficit, and the deficit is going to increase because of various reasons.
And what percentage of the current business of SIP is that?
It's maybe 15%. Yeah. So I think we have to close it now.
So sorry to interrupt. Actually, we have run out of time. So for any further clarifications, you can directly contact the management.
Yeah. But anyway, thanks a lot, Shrivar. Thank you so much. Take care.
Thank you.
I now hand the conference over to the management for closing comments.
So thanks all for participating. I truly appreciate many questions this time, and we've had a tough quarter, but I think we have a great team. We're going to bounce back from this even stronger. I think we are well set up. Like I said, the green shoots which we already see coming on the consumer side, and the fact that we have these two divisions, consumer and scientific, I think makes us very resilient as an organization, very strong. And I expect over the medium term, both these divisions should be positively impacted by the changes we see in the world around us. And I'm looking forward, to returning to that kind of normalcy. So with that, I close my statements, and maybe we will chat in the after 3 months or so. Thank you.
Thank you.